Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. It's early January 2014, and I have a message for investors, especially investors that live outside of Oklahoma, because the amount of investment business I'm doing outside of Oklahoma, the state, in terms of people buying investment property here, far outweighs the local people. Oklahoma City, historically, for quite a few years, has been a very safe haven for your money in terms of real estate investing. But, there's a lot of markets where that is not the case. Now, we know we went through this historic meltdown in 2007, 2008. We know some markets went down 50 to 80%. And I think it's just incredible that housing has recovered so quickly. It shows that owning a home, whether you're an investor or an owner-occupant, is still the American dream in this country. And it is still one of the better investments that either of you could make. But we're seeing some volatility in other markets. Let me take one example. Phoenix is one of those bubble markets like Stockton, California, or Orlando, Florida, Atlanta, Georgia, Las Vegas, for instance, that had a huge meltdown. And since that meltdown, first of all, investors, especially institutional investors, were going into Phoenix, buying in a large fashion. And then your private investors, someone that would buy 2, 3, 4, maybe 5 properties, from various parts of the country. Remember that, one time Phoenix was a hot market, and so they're seeing all this activity, and then they followed through on that. And people are still buying, or were still buying last year, investment property in the Phoenix market. But what happens to markets like this is a couple of things. First of all, supply and demand in investment properties is very crucial. And so when you have that much investment property in Phoenix that you do right now, it was like what I saw in 2004. Vacancy rates go up considerably and rents go down because there's not enough demand to meet the supply. And so what investors are doing right now is recognizing this fact, going, oops, we should have bought in 2008 and we didn't, and so we want to sell. So in the case of Phoenix, if we take last year, January, versus this year of January, where other markets in the United States, including Oklahoma, have a very low inventory of homes for sale, Phoenix is actually up about 40%. And so now, not only do we have too many investors, but we have too many houses on the market. This is what I call a market reset. These markets that melted down 30% to 80%, they came up very, very fast. It's like coming up too fast from a scuba dive and getting the bends. And they are wondering, what is the value based on supply and demand? And so we're going to see Orlando and Atlanta and Las Vegas and Phoenix, to be specific, that are going to show lower yields. They're going to show some reduction in value in some of those market areas because, again, real estate should be based on supply and demand. So this is where Oklahoma City is first rate. This is where a linear market is first rate, one that doesn't have high highs, low lows, one that didn't have a lot of foreclosures, one that's under the radar and doesn't have those huge corporate investors coming in and making huge purchases and affecting the market and then seeing a sell-off. So this is important to know the differences in these markets. Understand that through 2014 and a lot of the bubble markets, we're going to see fluctuation and volatility in values. But Oklahoma City, steady as you go, solid appreciation, a great predictable market, not having these problems. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.